Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, we'll go over Tesla, go over the market, discuss what happened and what we can expect moving forward. Of course, don't forget tomorrow is a pretty important day, right? With CPI print coming in 8:30 in the morning. So that can definitely dictate quite a bit moving forward. But with all that being said, let's jump into it. If you enjoyed, don't forget to hit that like button. Quick reminder, I do have the memberships now live. If you want to join, all you have to do is simply click this join button right here or click the first link in the description. And for $2.99, you get to join the membership only section where I will be posting, intraday updates on Tesla chart as it happens. There was 2 posts today. You can kind of pause and see what I said so far if you want. But so far playing out exactly as I said in the membership section. So that's that right there. But of course, I will discuss everything regardless in these videos. It's just you won't get them as it happens and you won't get them in advance, as the chart is moving or as Tesla is moving. So that's there if you want it, of course. And again, not financial advice. I'm not a financial advisor. Make your own decisions, do your own research, but Tesla will be closing down 1.54% on the day, which is going to be putting us at $169.15, which is going to be more or less in line with the market. But moving forward, so tomorrow, of course, CPI day, a massive print coming in, which can definitely dictate how the market and Tesla, of course, following it will move. Now, so far it's playing out pretty much exactly what we discussed in yesterday's video and in yesterday's post and in today's post as well, right? Where we talked about how, we expected to come down a little bit of a sell-off into CPI, a little bit of fear into CPI, which I did talk about actually the other day as well. I can't remember where it was here, right here, right? We talked about that yesterday in the members Discord, or not Discord, sorry, in the members section, right? How there is, it's not uncommon for there to be fear and selling into something like a CPI print, right? Which is essentially what we're getting right now. You can see a bit of a selling pressure, but a nice little rally, of course, to finish off the second half of the day. So that's fantastic so far. I personally have bought back my my sold calls. I did buy them back almost near the bottom. I wish I got it near the bottom, but pretty close to the bottom. I think I got them around 167. I think it was when I bought them back. So not quite to the bottom, but pretty close. So yeah, I bought those back and I do expect there to be a higher chance of a rally here than more falling. However, of course, CPI print can, of course, change that. But for the most part, I personally, so there's major levels to look out for right now, right? The first level to the upside, if you want to unlock more potential to the upside, and there is, by the way, a very risky situation for the bulls, which we'll discuss as well, which we already talked about here. In the membership was right here, which we will discuss. But the most important level for me now is the gap fill, right? The gap fill are almost $172 right here. This is a very important level. If the bulls want to see further upside, they absolutely want to see the gap fill not only not rejected, but even if you do get a rejection, you ultimately want to see it overcome that situation, right? Which is essentially the bottom of yesterday's candle, as you can see here, right? The closure of this candle right here, right? You absolutely, as a bull, want to see this not act as a rejection, and it probably will, but regardless, you wanted to overcome that, right? And if we do overcome this, and if we do go above this 171 point, let's say 8 level, that to me is extremely important to unlock the next stage. And unlocking the next stage will, of course, bring us up to that 180 level mark, which I personally still think is very much in play, right? At the very least, like 177, in my opinion, like 177-ish for sure, maybe even 180, right? That is extremely important. So you really want to see this level get destroyed by the bulls, ideally tomorrow. And I think if it does happen, it'll be tomorrow at the latest Thursday, right? That's extremely important. And the reason that's extremely important is because, as I talked about in this post 6 hours ago in the members chat, you can see how, we were forming, or we are arguably forming, what looks to be potentially a hanging man candlestick pattern. So that right there is very, very important. You really want to make sure this doesn't play out, because if it does, this will ultimately mean that we are, followed by substantially more downside. The way to invalidate this, in my views at least, is to essentially enter the territory of this candle, right? This is why if we come up to this candle's close, let's say for instance, tomorrow morning or whatever, we gap fill, right, this 172, let's just say to make it simple, level, and then we just start rejecting and selling offwards, that's extremely bearish. You definitely do not want to see that. You want to see it break above it and enter the overall territory of this candle right here from yesterday, right? Extremely important to essentially destroy this bearish potential thesis that might actually still play out, right? So you really want to see it come into that. However, if we do, I do think 177 to 180 is absolutely unlocked. So that's extremely important to understand. However, with that being said, we still haven't actually retested this breakout at 165, let's just say, to make it simple, right? We haven't retested that. So technically, there is still a possibility that we come down here first to truly retest this breakout that we had, right? We had several, instances where we touched it over here, right? This was the consolidation phase where we finally broke out right here, right? So very, it wouldn't be unheard of to get one more leg lower before we finally make our way even higher. So I want to make that very clear. I think people always like try to write stupid comments. I'm just gonna make it very clear so people don't have, I don't have to read stupid comments anymore. I personally think there's more upside left. However, with that being said, whether we go straight from here after CPI print up to 177 to 180, or we first come down to retest to get a true retest of this 165 level and then rally, I personally think regardless, if we go straight from here or 165 first and then go up, I do think that there is more chance to go up than down regardless, right? Regardless of the path that we take here, right? I want to make that very, very clear. However, with that being said, if 165 level is lost, if we do enter re-enter this overall congestion zone that we were in, not too long ago, right? That to me will be pretty bad, especially if we don't recapture 165 within the same trading day and ideally as soon as possible. Extremely important. So that's something else that is very, good to understand, moving forward, right? So those are the main things I am personally looking at as of right now, right? To reiterate one quick time, 165 potential retest is still in play. However, that must hold. Regardless, whether we go to 165 or we just rally straight from here from CPI, I think 177 to 180 is in play, assuming we break above this gap fill level of about 172. So those are the main levels to pay attention to. But if we do, let's say, for instance, come back down to 165, and let's say we don't hold it, let's say we actually fall below it and we collapse below it and it's looking bearish, that to me would be quite bearish. That to me would mean that, this most likely was the short-term top and we will continue lower. Now, let's talk about more of this hanging man, right? This usually signifies if we don't go back above it, right? So in other words, into this candle's territory, that signifies that this pattern will play out. And this is a pretty bearish pattern where essentially all it means is that we are essentially going back on a short to medium term and downtrend. So the bulls absolutely, without question, with something like a CPI print tomorrow, really want to see it push back above 172 tomorrow. Ideally, that would be the most ideal scenario, because even if we come down to 165, that still puts a little bit more pressure on the bulls, and that makes the things a little bit more nervous. But again, as long as 165 holds, I am still bullish for a potential rally up to this level up here. So that's kind of the main things I am personally looking at as of right now, and that's what I will be eyeballing very closely, especially tomorrow. Tomorrow will be a very, very big day. So you definitely want to be on your toes for that as well. But I have again bought back my sold calls, because I do personally believe that there is more potential to the upside to the down than to the downside from here, with a nice decent looking candle after today's close as well. So we'll see how that comes into fruition tomorrow. Again, very nice to look at TSLQ just to get a potential slightly different look at the chart, right? It gives you a little bit of an inverse look, but it can give you a different, not a different perspective, but it can give you just overall a different feel for it, if that makes sense, right? And in this case, it's not saying too much, in all honesty. This one, I feel like TSLA is definitely looking a little bit more obvious to me here. The TSLQ is not looking too obvious for me right now. It's not looking and giving me too much information, so I'm not actually going to go too much into it, because I don't think I like it too much right now regardless, right? It's not as obvious or understandable to me as this is. But also the daily RSI looking pretty phenomenal, right? Not looking too bad at all. Definitely has room to the downside still overall, in my opinion. So even though if we go up to 180 or 177, I do think after that, right, regardless of what happens here, I do think it will be something like this regardless, right? So that's kind of how I see it playing out further, because the RSI definitely has more room to the downside. Also, if you move over to the 1 hour chart, you can see the RSI has went into oversold territory just recently yesterday, right? And now you can see it's starting to fall pretty substantially, right? We only went down to this level, but it's already almost at the same level as we were back when we were trading at a 160. So, the RSI is definitely showing a little bit more weakness on the 1 hour, but it's not enough yet to really truly go bearish just yet. So keep that in mind. I personally think that if we do get another drawdown, so for instance, let's say this is the situation that plays out. Let's say we do get a drawdown to 165 as a retest, and then we rally up like this, and then we go like this. Actually, no, forget that part. Let's just pretend like this for now, right? Let's say this is the move that we get moving forward, which is very possible. I want to make it very clear, right? This to me signifies that the RSI will most likely do something like this. And then as we make a higher high up here, obviously compared to this, I think that, again, that's this right here. We will do something like this instead, and it'll make a lower high, right? Even though it made a higher high here, start setting up a bearish divergence on the 1 hour chart. And I think from that, we will start to, form more bearish theses, more bearish patterns, formations, whatever you want to call it. And I think from there as well, where we will most likely slowly start, creating that next leg down. So that's kind of what I'm seeing as of right now, ladies and gentlemen. So let me know what you think down below. The last thing we'll take a quick look at is back on the daily, of course. We will go over, I don't know what is this little dot here. I can't really remove it. I don't know why it's not letting me remove it. There it is. We will take a look at the 21 email, which we are still getting rejected by. So yesterday was a bit of a bull trap, as you can see. Right, so that's number one. You definitely want to get above that, and the gap fill from yesterday's candle close, extremely important. We're pretty much right at the median line of the Bollinger Band. Remember, we talked about it here, and we talked about it's very common for it to always go back to the median. That's exactly what happened, right? Back when we were still here, we discussed that. So clearly that happened as well, right? And then the 10-day moving average is actually below us, which is a good sign as well. So, a little bit of a limbo land here, especially with CPI tomorrow, but I personally think there's more upside than downside potential for now, as long as 165 holds at the lowest possible level for the bull thesis to still play out. But after 177 to 180, I think we'll go lower regardless after that. At the very least, double bottom, if not all the way down to at least 145 or so. But that's kind of what I'm seeing. Ladies and gentlemen, thank you so much for watching, and I'll see you tomorrow. Peace.